Hello, Market Watcher. I'm David Ravel, and this is the value side for Thursday, May 27. Today, inflation, back to the basics. Then the latest corporate results, as well as today's economic news, coming right up. Well, it's a very big day for economic reports. The headline numbers will likely come from the durable goods orders, always a good harbinger of the future of heavy industry and manufacturing. This will be followed by the preliminary estimate of Q1 corporate profits, and I'll be spending a lot of time going over these two reports, especially corporate profits, later in the day. Incidentally, both of these reports are looking a little sickly. Durable goods orders are expected to rise a mere 0.5% this morning, hardly what you'd expect from a roaring economic rebound that Wall Street has been looking for. While corporate profits, the fundamental driver of stock prices, remember at some point it is price to earnings that really counts in this stock valuation. Well, if analysts are anywhere close to being accurate here, and I think they are, then corporate profits are going to come in positively dire. Wall Street is looking for corporate profits to decline by over 3% in that first quarter of the year. And that puts a real monkey wrench in any thoughts of a robust recovery right now. In fact, it implies that we may not be recovering very much at all. And that brings us to one economic report that I think will have the most lasting impact on the Street's view of the economy. And that report is the Gdp Price Index. Now, in measuring the overall economy, the gross domestic product, economists are always trying to determine how much of the economy's growth is due to real production of goods and services versus how much is just due to inflation. In other words, is the economy just reflecting a general rise in prices, or is it really becoming more productive? It's a critical question for investors also. After all, you want the companies that you invest in to become more and more productive and more profitable. You don't want their stock price to become higher simply because of an overall price inflation, something that's not very healthy for any of us. And again, we'll know the answer to these questions in just a few minutes. But let's look at what Wall Street does expect. The Street expects to see a huge jump in inflation in this measure of the GDP Price Index. In fact, they expect inflation to more than double, from 1.9% in last quarter's report to over 4% inflation in this report. In other words, the Street is saying that we are not in an environment of greater productivity and higher profits, but we are just seeing the results of higher prices. In other words, we're going into a high inflation period. Now, incidentally, I'm not sure that I agree with all that. Personally, I think that we're likely to see prices settle down quite a bit going forward. But the Street is absolutely convinced that prices are going higher and higher. So now let's go back and look at those two other reports that will come out today, durable goods and corporate profits. If indeed we have entered a high inflation period, then we can conclude that those higher prices on durable goods are merely a reflection of that inflation. And what's worse, those corporate profits, the ones which are expected to decline over 3%, well, that decline might have been even worse, except for companies' abilities to pass on those higher prices. So today, it's a very big deal in terms of the insight that will be given on the economy, and it will take us several days to sort through all of this data. But my overall conclusion, assuming that these expectations are anywhere close to being correct, my overall conclusion is that we are looking at higher prices, an environment of very sick corporate profits, not the sort of thing you want to build a stock market rally on. So as I say, it's a very big day for economic data. Leading off will be the durable goods, then the second estimate of Q1 GDP growth rate and price level. then corporate profits, all that for Q1. Now, the weekly numbers of jobless claims and pending home sales will also be seen this morning. All in all, it's a huge day for economic reports, and one that will take us some time to work through. In earnings so far this morning, positive results from a couple of retailers, discount stores Dollar General and Dollar Tree, both trading higher at the moment, as is Best Buy. Now, after the market closes, we'll have reports from Salesforce.com and Costco Wholesale. And that's the value side on this Thursday, May 27. I'm David Ravel. Please join me in praying that our country may get back to work.